What's going on, everyone? My name is Javier with PPG Capital, and I'm excited to announce a new partnership online with Jersey Media, and we're going to be covering current events, stocks, finance, credit, an entire new interactive segment where I'm going to be going over the biggest news that's going on in the world, how that affects everything with inflation and the Federal Reserve dropping rates, and how this is going to affect the real estate market. Lots of things are in store for the end of this year into 2026, so I'm excited to start this with all of you. So going right into it, it's pretty crazy. Like, here we are in December, the year flew by, and I'm thinking to myself, where do we go from here? Like, the market has been super volatile moving at the end of November into December. So we're kind of like, are we going up? Are we going down? Inflation is coming. Lots of people are saying that the pressures from the tariffs back in April are, subsiding. We just had a huge Black Friday. Lots of people were going out, spending tons of money, buying new products, buying laptops, iPads, MacBooks, getting ready for the next wave into 2026. Because if you're an entrepreneur right now, you are strategizing, you're planning your next steps into the new year. So you're making all of those investments right now while those consumer products and items are cheap. So that's really good for companies like Amazon and Apple and Meta, who all make money from not only their products, but the ads that all of those entrepreneurs are going to be now pushing into the new year to get new customers and new ideas. So in my opinion, right now is the best time to be involved in marketing, to be involved in the market, to be paying attention to your personal finance, because if your credit and your network of people who you can do business with is strong moving into the new year, you're going to absolutely kill it with all of the momentum that I'm sure all of you have already had this entire year. So that's going to be magnified, in my opinion. There's a lot of geopolitical shifts as well that I think everyone should be paying attention to. As I am a history nerd, I have always studied war and strategy. So that's just something that interests me personally. But now, me growing up, I realize how prevalent that is in everything that's going on with the world, right? So all of you, I'm sure, know that we've moved almost 20% of our active Navy into the Caribbean and could be pursuing military action in Venezuela. So this is huge news, honestly, and could really affect not only oil and gold prices, but silver and stocks as well. A couple of months back, when you remember the United States struck Iran, the market did not care. The market actually went up. So I wouldn't be too worried about any strikes kinetically in Venezuela affecting the markets or ships or anything like that. My main focus would be on the defense stocks, right? If we're going to be going into a situation where it's a conflict, I would prepare by getting defense stocks, putting your money in things that you can already know is being telegraphed, right? If we moved an aircraft carrier, we're flying jets all over the airspace. We've actually closed the airspace. I don't know if you guys heard about that, but Trump actually closed the airspace entirely around Venezuela, and didn't let any passenger or commercial flights in because of how much state planes were up in the air. So it's an interesting time to travel the world too. I think it's very, you can actually probably get it cheaper right now because of how much risk is out there. Nobody wants to fly because of all the things that are going on with the airlines. We're the country is still reeling off the backs of that government shutdown. So there's a lot of things that are still coming back online, people that are still waiting to get paid. So all of that has to take time to seep into the economy before we can have that rally. The Federal Reserve is finally going to stop quantitative tightening. So what that means is there's going to be a boost of liquidity in the market because cash is being freed up. In about a week or so, we're going to have the Fed rate decision. So if you see right now, there's a small rally in stocks, and that's because that's the market anticipating the rate cut. So if the cut comes, or especially the language after the cut, right? Because a lot of the times the market doesn't even react to the cut. It reacts to the kind of dovish or hawkish behavior after. Like if they cut and they say, we're not really thinking about cutting again because of these market dynamics, that's going to make the market tank, because the market wants to hear, we want easy money, right? We want cheap, easy money. We want easy credit to continue to go up. As soon as that was up for grabs and we didn't know what was going to happen because we didn't get that job report, you can see the market just went right in the toilet for days. You saw the liquidation with Bitcoin and Ethereum and XRP. People lost hundreds of millions, if not billions of dollars, right? So like Tom Lee was saying the other day on CNBC, he was saying that the market makers, the people who actually control like the ETFs and the big money like Coinbase, stuff like that, those were the people who lost a lot of money. Of course, and people who were over leveraged. If you're over leveraged trading crypto, you got washed out of the system. So it takes a few weeks, if not months, for that to kind of heal itself and let people like get back on the train again. But for all intents and purposes, I think that those dips always should be bought in a market that's giving you easy money. And the fact that there's going to be more liquidity in the market, they're going to stop buying mortgage-backed securities. The Federal Reserve is going to stop buying that. Why is that important? Because the housing market has been going nothing but up since COVID. If you live in the tri-state area, New Jersey, anywhere in the country, really, you know how unaffordable it is to buy a house, where it's a nation of renters almost. So the Federal Reserve has been sustaining that by buying mortgage-backed securities. They're not going to be doing that anymore as of December 1st. So lots of people are already going out and saying that the market is going to have a correction in real estate for that reason. Now, whether you believe that is true or not, nevertheless, those are the market dynamics that are happening. So it's important for you to keep that in mind and make your decision off that. If real estate might take a hit going into 2026, I just saw a chart the other day that's like something of 30% of people who have a mortgage missed their payment in the past 3 to 6 months. So if that trend continues, lots of people are going to be losing their homes. Lots of people are not going to be able to afford their mortgages, and they're going to go into foreclosure. And you pair that with high inflation. Let's say, for example, if we do have to go to war, we have to print money to be able to pay for that. So that's going to cause inflation, and that causes prices to rise. So that's why it's super, super important right now to be in control of your personal finances, right? Not overspend what you're making, to cut back, and to get into a sales or marketing mindset. You have to be, okay, how can I expand my network? How can I meet new people, create a new business? How can I expand myself so where I can secure my finances and make smart decisions? Right now, lifestyle inflation is the main cause of poverty in this country. If I'm making $100,000 a year, and before I made $100,000 a year, I was only spending 50, but now I got a raise, right? I'm super happy. Like, let's say 2026, I got a raise and now I'm making 150. My expenses shouldn't go up to 120 just because I'm making 150. I have to keep that same standard of living so that I have room to invest. I have room to make mistakes. And if I want to take a risk and invest in a business, I have space in my personal finance to take that risk. And if I'm wrong, it's not going to be the end of the world, because I'm not spending my money incoherently on things that don't matter. I don't want to be spending my money just to be a consumer and buy silly things, right? You want to make smart investments. So that's what I think the theme should be moving into 2026. Everybody should be making smart investments, get into sales, get into business, grow your business, expand your network, expand your mind, right? You got to read those books. You got to watch those YouTube courses, and you will have a killer 2026. I think it's super important for everybody to do that, especially with credit card rates going up. There's a lot of people in delinquency with credit card rates as well. So getting your credit and credit profile all in order is key. Let's see. What's up?
So, for right now, going into 2026, I mean, you just gave some like awesome hints, right? For some people who are not so well versed in the market, what are some tips that you feel are necessary to get more well versed in the market and what's going on with our society, our world right now?
Like paying attention to it?
Correct.
Well, the best three things that I would tell anybody to do right now if they're interested in the market and getting into market dynamics is number one, download TradingView. It's free. Anyone can do it. Create a watch list and literally put four tickers on there: SPY, QQQ, GLD, and SLV. Those are two silver, that's silver, gold, and two tech, oh my goodness, what is that called? Tech indexes, right? Those are two tech indexes that you can watch every day and just watch how the market moves. The second one would be to find your favorite news source that is non-biased, right? Because you want information, you don't want opinion. So just find a way to kind of cancel out the noise and find good information that you can use Google Trends to verify, right? And that's another one. Using Google Trends is super important because when something happens in the market, when something happens in the world, people are going to be Googling it immediately. And AI is also going to really help you kind of like strategize your search when you're looking for certain information. So just go on Google Trends and say, okay, what is the biggest trend today versus what it was last week? If we just started the week this week on a Monday, you know that you had already checked what the Google Trends were on Friday. How did they change? How far down the list did your original trend search go? So that's going to give you a good indication of what's going on in the market and how much interest there is moving forward. So that's a good one too. Yeah. What about you? Got any questions for me?
Sure. I just asked.
Yeah, you asked a question?
Yeah.
Let us start asking my question. You mentioned AI.
I was gonna. I mean, kind of piggybacking off of what you said earlier. How do you feel right now with what's happening with the war in Venezuela? How do you feel that that's affecting the current stock market?
Honestly, how Venezuela is affecting the stock market is pretty crazy. Kind of like when we went to go bomb Iran, they really do. The market did not care. The market did not move negatively because of that. As a matter of fact, I think that if there is some immediate action, first of all, for people to understand the scale of the military action here, we've moved our Gerald R. Ford aircraft carrier. That is the biggest aircraft carrier in the U.S. Navy fleet off the coast of Venezuela and then cleared out the nation's airspace. That I don't think we've done that since like the invasion of Iraq, like back to world, you know what I'm saying, 2005, whatever that was. So that tells me that the administration is not playing around, right? They're serious about what they're doing. So I think that checking out gold, checking out oil, because if we go to war, we need oil. Oil prices will immediately react. And I actually just saw an article today that oil prices were down, right? Because if you paid attention, we had that deal with Saudi Arabia. Saudi Arabia is a major OPEC plus nation. They control directly the flow of oil and the price. So we made a big deal in exchange for our tech because the United States is a leader in the tech industry. So we have very expensive chips, right? NVIDIA is an American tech company. In exchange for access to our chips, we get access to a stable oil flow. If for some reason Venezuela goes kinetic and we start launching strikes, that could cause a temporary spike in not only oil, but gold as well, because gold is a safe haven. If you look at the price of gold right now, it's down because tech is up. Tech is risk on, right? If you want to put your money in Apple, Nvidia, Amazon, you're taking a risk. That's a risky bet. Gold is viewed as a safe haven. So in times of risk on sentiment, right? I want to take a risk. Gold will go down and tech will go up, and you'll see the opposite. If the last dip that we had in the market, I believe, was November 21st. If you look at the price of gold versus the tech industry, you'll see they're almost inversely correlated. So that's something that you can always, if you're a trader, you can keep that in mind. You can say, okay, well, today was risk on for assets, so SPY went up, but GLD went down. But in that situation,
Put that in dummy terms.
so the SPY or the QQQ is basically the stock market ticker for the tech basket of goods, right? The biggest holdings of those ETFs are basically NVIDIA, Apple, Meta, Google. those kinds of companies, right? The massive big Mag 7 names. And then there's other in there, but they make up like 30% of the market. So if they move down, the whole market goes down, right? So GLD is basically the ticker for gold, right? Direct spot access to the gold price. So inversely correlated means if one goes up, the other one goes down, and vice versa. So you can make your own determination and say, okay, well, what's people's appetites today? What's moving up and what's moving down? And then you can turn on the news if you want and see what the news is saying and how that pairs up. Because it's almost funny. There's a meme. It's like the inverse Kramer. You know who Jim Cramer is? You guys heard that? Right, yeah, from Seinfeld. But Jim Cramer, they have created an inverse Kramer ETF. So it's basically like some dude who's on CNBC. He's famous and he's like been on the show for years. And it's almost a joke because he gives such bad stock picks. So people have created an inverse ETF where everything he says, people do the opposite. And this week that just passed, he said, "Oh my God, sell, like the bottom is in." And then we had like a crazy V-shaped recovery, just rip your face off rally. And it's like a sick joke because like if people listen and actually put their money in the shit that he tells you to do, you're gonna lose. And it's like funny, but that's like one of the jokes in the trading world. But that tells you the disconnect between traders and the real world, because there are people who are going to listen to him and, oh shit, you know, he has a show, he's been on for 20 years, whatever it is, and he's got a job, so he's got to be smart. I'm not saying that he's stupid, but it's just the way the market works. Just because he says Apple's going to go up tomorrow doesn't mean that Apple's going to go up. He has no control over that. Everyone's a guesser, really. We just have the people who have money in the big hedge funds, they just have tricks like, indicators and much more access to information than regular people do. You know what I'm saying? Because they're worth hundreds of millions of dollars. Of course, the average person cannot compare, but the average person still needs to invest in a 401k. The average person still needs to have a Roth IRA and invest in their future and all of that. So it's just important that, and that leads to back like most employers, they're like, their retirement plans are like crappy. Like they don't even have good investments. They invest you in some target fund where you don't even need to do that. You could just buy the index your damn self and save on the management fees. You know what I mean? But most people don't do that. They just, whatever, let their employer do it. I don't even meet with the guy that comes with the binder in 3-6 months. I don't know. You know what I mean? So, but that's why there's hedge funds. That's why there's money managers, because people don't want to deal with that. The stresses of trading and investing and all of that. They don't want to deal with that. They just, somebody else do it and I'll pay the price later. Is there money for me to pull out when I need it? That's what they ask. If it's not the answer to that, then they don't want to hear about it. Did my money make money?
Will Trump run get a third term?
Will Trump run a third term?
Crazy.
No, I don't think he's going to run a third term, but I think that he will have someone who agrees with a lot of the things that he thinks about run, whether that be J.D. Vance.
Before we get there, could he get a third term thing even?
He cannot get a third term. Unless World War III happens in the next 3 years, he will not have a third term.
Oh, yeah, they say that's against the law, but he supposedly he could change it.
Yeah, he could change it if it's a wartime situation. You get what I'm saying? I would assume. I don't know constitutional. I don't know, but
I think it's something that he would try to push so that he can stay.
it's not his. It's not up to him. It's the same thing. It's the same thing as the market, right? You could say that World War III will start tomorrow, but that don't mean it's gonna. You know what I mean? And you have always keep in mind too, like World War III is an extinction level event. There will be no survivors. You get what I'm saying? There's no bunker that you can live you're gonna come out like in Fallout. It's over. You know what I'm saying? So I don't believe we will get to that point for a long time, because we are humans. We inherently want to survive. Just because we disagree with other people doesn't mean that we all want to die. You know what I mean? So, but no, I don't think so. But it's interesting to see all the nuclear tests. Did you guys see that? We're updating our nuclear arsenal. Russia's shooting up nuclear missiles. Well, not nuclear missiles, but
Everybody's trying to get ready, right?
they're testing their missiles, right? China's doing war games with Taiwan and shows of force, all those things. All of those things are signals before shit pops off. And if you pay attention to it, I know it's horrible to say, but you can make money off of it. because it's going to happen whether we want it or not. It's not up to us. You get what I'm saying? But if you pay attention and you're prepared, you can soften the blow before milk's $10 a gallon. You know what I'm saying? And then it's like, oh shit, what happened? Signs were there. You should have paid attention. You had months.
So I got a question. I know you play a little with cryptocurrency.
Yes.
What do you feel is going on with the crypto world right now with everything that's happening?
The crypto world is pretty crazy, but it really all depends on who you're asking, right? Because there are people who have bought crypto super, super cheap years ago who are hodling all of their crypto and they want to dip like this because they're buying more. And then there are people who are trading it and they're super over leveraged and are like freaking out because they lost a bunch of money. It would depend on who are you, the crypto holder. Somebody who is holding long term is not really worried about this price. They actually want it to go down more so that they have a chance to buy. All you have to, the beautiful thing about Bitcoin is that everything is public knowledge. So you can go on the ledger and you can see the people that are purchasing and where their money goes and all those things. So if you see the big people buy, just buy when they do. Bitcoin, Ethereum, and XRP are the three biggest cryptos and the ones that I believe are going to be the ones that continue into the next new finance world. So as long as you're buying at least 10 to 20 bucks of that a week, minimum, you'll be all right. I think you'll be fine in the next 15 years. Let's say you're under 40 right now. And you buy 5-10 bucks of Bitcoin and XRP and Ethereum every week for the next 20 years, and you retire when you're 60. You're going to be a millionaire. Easily, I believe you'll easily be a millionaire, multi-millionaire. Bitcoin will go to, give me a time frame. What's the time frame you want? In 10 years, Bitcoin will be like $1.5 million minimum. In 5 years, minimum, if not more. If not more. Think about it. We were at $125,000 a coin a few months ago. Like, that's crazy. Think about the people who have been holding Bitcoin. I have a screenshot of Bitcoin during COVID for $3,500 a coin. If I would have spent 10 grand, if I would have bought like 10 of them, I would have made like $10 million in 5 years. That's disgusting. You know what I'm saying? It's fucking ridiculous. So it's, it's all about where you, now, because now there's people who bought into the hype a couple months ago and bought Bitcoin at 125,000. And they're sitting there 50% down, if not more, because a lot of people who buy Bitcoin and crypto, they buy at leverage. So it's like 100x leverage. I put $5 of my own money and I get $5,000 of Bitcoin. But if the price goes the wrong way, I'm liquidated immediately and I owe all that money plus more. You get what I'm saying? So you're cooked if that happens to you. But if you're responsible and understand what Bitcoin is, you're not worried right now. You're happy right now. You're excited. Because all of that bad decision making got flushed out of the system, right? So now it's just pure price. The more bad actors that get flushed out of the system, the more free market force there is there. So, and if you want to get into Bitcoin, dollar cost average it. I got 30 grand, I want to buy it today. Hell no. Never do that. Ever with anything. Anything. Ever. You always, if you truly believe in it, put your foot in it. Right? You put your foot in, I'll put $100 in there. Let's see what happens. Wake up in 2-3 weeks, oh shit, it's 160. To some people, that's not a lot of money. Yo, bro, it's stupid. But if you have money and you put 100,000, if small money to you is 100 grand, you put 100 grand in and it turns to 160, you just made 60 grand in like 2 months, 2-3 months. That's people's yearly salary and then some. You get what I'm saying? And just holding. So it all depends where you invest at. That's why you have to have a long term. The Japanese business model, short-term business model. How long do you think it is? You in the comments, let me know the short-term Japanese business model. Without looking it up or without using AI, tell me how long you think it is. Just wild guess. How long do you think that the Japanese mindset for a business plan, how long do you think they plan for?
I would say 20 years.
What would you say? 10? That's right on the nose. 20 years. The Japanese have a 20-year business plan, and that's categorized as a short-term business plan.
I heard you say short term. That doesn't sound like short term.
Right. Yeah, I'll give it away. Okay. Short term. You know what I'm saying? But that's to tell you, not to make this racial or anything, but that's to tell you the Asian mindset, right? Because the Chinese are like that too. Remember, China is the oldest civilization on earth. Their kingdom, right? It's the oldest one. It's the oldest lineage of people other than the Egyptians, of course. I'm not saying that, but that we have of humanity, of dynasties and all the things that they did, right? They're thinking 100, 200, the 300-year plan. Think about it. America is only 250, not even 250 years old yet. They got us beat by 2,000 years. We're pulling up our diapers.
You heard about, do you know about Temu and their investment?
Of course, Temu, Alibaba, Baidu, Tencent. That's why they forced them to divest TikTok to Oracle, because we don't want the Chinese stealing all the data. That's what happens. But we knew that years ago. It's just that's what I'm saying about signaling. You see how that is like decoupling, right? We don't want you to have this in our country anymore. So we're gonna make you sell it to us, and we're gonna have an American company, take reins over that data, take reins over that information, and all of that power of financial. Because how many people have their business on TikTok alone? How many people are marketers? How many people are, influencers who strictly make their money off of income? It's an entire tax bracket of people in one app. So.
Right now with all the streaming
and we're just getting started.
A lot of people making a lot of money right now.
We're just getting started. Everybody wants to talk about market opportunities. Look at Meta stock price right now. After their earnings tanked, like $150 a share went down. Buy. Meta is one of the biggest tech companies. Everyone's making money on that platform. No reason not to buy that stock if it's on a significant discount. Zero. But a lot of people say, "Oh, it just tanked. I don't want to buy that. I don't want to be the one to hold the bag." There's a lot of bag holders who bought that stock at $700 a share and looking at themselves right now with it at 600, like, damn. I wish I could have bought down there instead of going all in at the top over here, or whatever you think is the top. So it's all about perspective in the market, 100%.
So another thing I wanted to ask you right now, I know with PPG,
Yeah.
you do a lot of work with credit, right?
Yeah, credit's the main thing.
Just going along with everything you've been chatting about, what do you see on a smaller end happening with people right now looking to get lines of credit for, say, like smaller purchases, not really smaller, but like, say, cars, homes.
Like buy now, pay laters as well.
Yeah, I know you're in the car industry, right? So, let's just start there.
Right.
In the car industry, someone looking to buy a car, how do you see what's happening right now in the market affecting, purchases like that?
Yeah. I mean, anyone in the car business right now will tell you that the past, I'd say 2 to 3 months have been pretty slow, right? The prices have went up. Lots and lots of people have lost their jobs. There has been lots of corporate layoffs and decision-making by big companies. So that has to work its way through the economy. And people are over leveraged. This is why I say personal finance is important, because people view credit, in my opinion, the wrong way. They view it almost as like it's not their money. Oh, that's the bank's money. I don't care. But it's tied back to you. That's what people don't understand. A lot of people, some people, smart consumers understand this. But why it's important to keep that in the front of your mind is, I saw a chart recently that buy now, pay later services like, Klarna, things like that have been skyrocketing, especially since we just had Black Friday, right? Going back to, I was talking about Amazon and Apple and how they're doing so well for Black Friday. Well, they're doing great for Black Friday because a lot of people are using buy now, pay laters to purchase those products.
Bro, those are amazing. I was just talking with Jen about that.
Right. It's amazing.
You know how much shit right now in this room was
Affirm, right. Right. And now that's a perfect example, though, because there are a lot of people who do that to invest, to make the right decision, to give them leverage, to hold on to their cash as much as possible so that they can deploy it somewhere else if they need it. Don't tie it up in, oh, I need an iPad. I need a.
And they be giving that shit to people when, like, yo, I ain't gonna lie. I got a good amount of this shit last year with a firm, and I've still recently got shit. And my personal credit wasn't really the best at the time.
Right.
You know where my shit was.
But they do that on purpose. They do that on purpose to trap the subprime borrower, right? If you're under 680 or 650, I believe you're subprime. So you're going to get a higher interest rate. Yeah, you can.
So they do that because they know they can lock you in at a higher
They,
interest.
and you're going to be making minimum payments for how long?
You're going to pay no matter what because you don't got it.
No, but that's on a per case basis too. It all depends.
But I'll be honest, like, I've gotten, like, these cameras are like 2,500, right?
Right.
I think I've gotten, like, at least 3 of them with a firm, or 2 of them with a firm.
Okay.
And we pay monthly for it. And the interest was like $300. Something like that.
That's expensive.
To me, that don't sound a lot.
300 on 25.
Yeah.
You do the math. What's that percentage? You do the math. Do the $300 on 25?
But for me to be able to pay that shit off in fucking 2 years
15%?
or a year and a half,
No, that's good. The point of buy now, pay later, this is what I'm saying about good credit habits. If you are using it to purchase something as an asset, that's the point. That's why it's such an amazing product.
It's like 12%.
12%. They just got you for 12%.
But
Look,
that's also because you paid it when you were supposed to. Now imagine if you didn't.
right.
oh yeah,
So now, right.
I pay on time.
Could you imagine making the minimum payment for 6 months?
Yeah.
You'll pay for the camera and interest if you do that. But if you look statistically speaking at the chart of people who use buy now, pay later services, that's what they do. They spend thousands of dollars that they don't have, that the company giving them knows that they're in a bucket. It's almost like 2008, if you really think about it. You know what I'm saying? What happened in 2008?
Shit honestly saved my life twice. The first set of equipment that we used to use at the house.
Oh, yeah.
That was all that Klarna.
Mhm.
Right. That's how I got all that equipment.
Oh, yeah.
And then half of this shit, we're still paying for on Klarna.
Yeah. 100%.
Not Klarna.
Afterpay.
No, firm.
Oh, Affirm. All of those are good, but in the hands of a consumer who has no control over their spending, it's a weapon of self-destruction. You get what I'm saying? Fuck your credit up. You know? And it's very easy too. It's very easy to do that. And some people, and you know what? They get you, sometimes you miss a payment. They bang you with a late fee and they don't want to give you the credit back. And it just puts you in a situation where if you're just aware of the money that you're spending, all of those problems go away. All of them. You know what I'm saying? I'm not sitting here saying that the services are bad. They are key to a functioning economy to make people be able to make those kinds of investments and those kinds of purchases to get you ahead, right? And
Right now, I think my Affirm bill is almost a G every month. But you know, this room is.
that's a lot.
You know how much this room is right now?
Yeah. Right. That's that you just gave a perfect example of leverage.
Yeah.
So when I was explaining the Bitcoin leverage, that's the same mechanism right there.
That mic in front of you is 500. Like that, like.
And you can get it for $50.
Yeah, I have.
Pay $50 a month and you can get it. An amazing piece of equipment that can serve a purpose and make you money. Right? Same thing what we were just talking about before.
Properly.
Right? If you pay for something
It's
and
not a designer sweater. It's actually a product that can
yeah,
help you do something.
exactly.
Just in pod equipment now to make what you're doing happen, you can make reviews. They might not hear me too well. It's like about $17,000.
$17,000.
Tell you, most of it I'm probably still paying for on the front, but it was, you know, that's how I did it.
Yeah, 100%. No. That's finance in a nutshell. That's capitalism in a nutshell. Really. We all want to borrow money. We borrow dollars to buy assets. And if the assets go up in value, we get the dollars back and make the difference.
Then I asked, like, you know what's funny? We're talking about this. Last night I applied. for a laptop. Can I need a laptop?
Oh.
Desperately. And they denied me. But I've had that happen to me before, and I just paid down some of the balance, and then they approved it.
Where did you apply? Like, how did you apply? Oh,
Firm.
because they had a 13-inch MacBook Pro Air
No, I need like a,
Pro.
no, yeah,
You need a MacBook Pro.
I need to do one.
Okay.
One chat GBT said I needed was like 4,500.
What? What kind of what?
I don't need. Why are you listening to chat for the?
Hell no.
For the finance. No, obviously, I don't like the one I really need is like 2,000
What kind? Like, what do you need?
to handle the editing that we need to do.
Like terabyte storage or like chip?
Yeah, they can't hear me.
Eh,
This is
yeah. But
all that
yeah, that's capitalism in a nutshell, fellas.
crazy.
So if these kinds of topics interest you and you are wanting to stay tuned, I'm going to be doing this every week. We're going to be covering lots of different market dynamics, lots of things that affect your money, your personal credit, and honestly, your life nowadays. Inflation's going up. It's expensive to buy just the basic groceries. So it's key to have a community and a network of people who understand good personal finance habits. And that's exactly what we're going to be doing. So stay tuned.